Good day everyone, this is your European Open briefing for Monday, October the 10th, 2016. I'm Rafi Bajajian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So the main market headlines today are the Friday's jobs data out of the US, and of course the presidential debate yesterday between Hillary Clinton and Donald Trump. The jobs data was slightly weaker, so that triggered a sell-off in the dollar, but it's slightly firm today following news over the weekend of some comments that Donald Trump made regarding his views on women, and that reduced the odds of a Trump win, which boosted market sentiment. So that's been the main headlines today, but in a pretty much quiet day, given that it's Japanese markets are closed and it's a holiday in the US and Canada. In other news, the pound is steadier this week. It's trading around $1.24. We saw a flash crash last week well, it was partly due to technical selling, but also it was we've got the ongoing concerns about the possibility of a hard Brexit. In Asian currencies, the yuan hit a 6-year low today after the People's Bank of China set a weaker midpoint, and oil is back down on partly on profit taking, but also on some doubts about whether or not non-OPEC countries such as Russia will join OPEC in cutting output. So let's have a look at the jobs data. The jobs data was slightly weaker than expected. Non-farm payrolls rose by 156,000 in September. Forecasts were 475,000. We had an upward revision in August from 151 to 167,000. So that kind of offset the slightly weaker figure in September. The unemployment rate actually rose from 4.9 to 5% as more people entered the workforce. But we saw wage growth edging higher from 2.4 to 2.6% in September. Well, market's reaction, we saw a bit of a sell-off in the dollar, as it meant that it's pretty much unlikely we're going to have a rate rise in November. Although markets still are expecting a December rate hike, the slightly softer data does ease concerns about the US economy possibly overheating if the job market improved too rapidly. So here in the charts we can see the drop on Friday after the US jobs data. The dollar against the yen has gone back above at the 103 level. It was boosted by the reports in US media that Donald Trump made some lewd comments about women, which have that hurt his prospects of winning the US elections in November. We also had the second round of the presidential debate between Hillary Clinton and Donald Trump, although that was mostly seen as being a draw between the two candidates. The markets are still expecting Hillary Clinton to win the elections, and that boosted the Mexican peso, which firmed by around 1.5% today. We can see here the dollar opened sharply lower against the peso, and it's currently trading just under 19 pesos. Let's have a look at the pound. We can see Friday's flash crash, which took the pound to a new 31-year low, $1.1450. It's currently around, still, it's been fairly steady, hovering around $1.24. It does remain vulnerable to downside moves, though, as businesses across the UK are getting increasingly worried about the impact of a hard Brexit. There's also concerns about the UK government's hardening line against immigration. Some of their new policies announced at the Conservative Party conference were criticized for being too anti-immigrant. So that puts the pound under more pressure. The euro bounced back after the jobs data. The dollar slide helped the euro recover back above $1.12. It's currently dipped back below that handle. We had some good German trade data today. German exports rose by 5.4% month-on-month in August. Expectations were for a much smaller 2.2% increase. This was the sharpest rise in over 6 years, and it points to stronger growth in the second half for Germany. And it does also allay any concerns of a slowdown after we had some weak business survey data out of Germany suggesting a possible hit from the Brexit vote. But the euro wasn't really much moved by the data. It was mainly influenced by dollar moves, and it was slightly under the 1.12 dollar handle earlier this morning. The Chinese yuan, we can see here that it just hit a 6-year low versus the dollar. The People's Bank of China set a midpoint at 6.7008 yuan per dollar. Chinese markets reopened today after a week-long holiday for the Golden Week holiday. There are concerns about the possibility of the Chinese yuan depreciating further. Last week we had data showing the currency reserves of the People's Bank of China fell for a third straight month in September, and this suggests that the People's Bank of China is still very active in supporting the yuan in the currency markets, as we're still seeing heavy outflows out of China. We had some PMI data earlier today. Actually it was on Saturday the data was released. The Caxian Services PMI was slightly weaker in September. It was 52.0 versus 52.1 in August. It shows that the Chinese economy is growing at a steady rate, but of course the yuan is heavily influenced by the People's Bank of China's midpoint settings. Now let's have a look at oil. Oil is back down today. We've got a meeting this week in Istanbul between Russia and OPEC countries. We do have some expectations that they will at the very least sign some kind of cooperation agreement, even if Russia does not agree to cutting output in line with other OPEC countries. But of course, the oil prices are sensitive to the outcome of the meeting, so we've seen the US crude slip back below $50 a barrel. We saw last week both Brent crude and US crude hitting a 4-month high following an ongoing decline in US inventories, and of course the OPEC deal to cut output. Let's have a look at today's calendar. We can see that we don't have much major data due to the US holidays. The main Eurozone data is going to be the Eurozone Economics Sentix Index. It's expected to come in at 6.3%. That would be the highest figure since the Brexit vote. In US data, we can see it's pretty much quiet due to the US markets being closed today. So that's it from me today. Thank you very much for watching. Have a great day.